Come to Remora TC to trade like a shark and not get eaten by one. Let's school together to protect and grow our money. Hi everybody, welcome back to my channel. It's been a week since we've reviewed the charts, so let's get right to it, to the 10 or so tickers that we've been tracking for months now. First on deck is the triple Qs. Let's take a look here on the daily chart. You can see a bunch of sharks up here. This is just the reminder for everybody that bearish divergence has shown up numerous times all along here. Let's see how the price action has been doing the past week. We've got all-time highs here. I'm just going to slide this over. Okay. The overhead resistance that I've indicated in the red here remains in play. So really there isn't a lot of opportunity to get in for a long, at least in this position, in this moment. The overall move that I still see coming is to the downside. I'm just going to slide this over to the right, my annotation over, like that. Okay. And the 200 days down here still, that's still part of the equation. So don't go long. If you're long triple Qs, maybe it's time to lighten up your load and then take your profits, because right now the likely direction is to the downside before it hits this support line down here. Let's go to the next ticker. Got GDX here. GDX finally brought in the divergence which I was predicting would show up. Okay, so I made this circle here down here, and I was waiting for the divergence to show up, and it has. So let me just clean this up a little bit so we can talk about it. Okay, so between this price moment right here, which is 15th of September, and where we are in the past couple of days, especially yesterday, you can see the price action going up yesterday with divergence to the downside. My annotation here with the squiggly lines, I feel is still in play to the downside. And if you're intending to play gold long, then one might say, well, you can take a long off with support here. So if it comes back down here, you can go long. But I really do think it's just a momentary bounce before it'll fail underneath this trend line. Okay, that is the overall direction for GDX. It's just all this built up energy down here on the RSI side is for the short. Sharks want to get out, but they want to bring people in to help unload their position. So really, this isn't the time to go long gold. The news has been talking about it a lot, but I don't recommend it. Okay, so to the downside still. Okay, let's go to the Bitcoin play strategy. All this built up divergence here, you can see the selling. Okay, and I talked about how there was this little moment here due to the RSI being bullish that price would likely do a little bounce with a maximum top end of this 362. But I also said that the 200-day would be in play. Now, from the last time that I talked about these charts, last couple of times, I thought that they would actually sell down this ticker to come down here to the 307 and then for it to take a bounce to finally then be rejected off the 200-day. But you can see that over the past week, price did not come down to this 308 and instead came up and got rejected off the 200-day. And you can see price has gone down further. So the question is, from where it is right here with this red candle, if the momentum and the direction is still to the downside. I still think there is more upside in this momentary move. Okay, so I'm going to make an annotation here. You Give me a second to kind of go like that. And I'll explain why I did that. Zooming in. So when we look at these green candles, I intend to make the bottom side of these green candles, which is the open price, the support. So you can see it there. Okay, it's like that, kind of like that. Okay, the open price. So you can see that it was support all along here. And when it failed, it came down, got retested underneath, came back up for support. But in the end, I think this is a little bit of a support line here. So the question then is, with this price candle going all the way down here, closing today at 327, if there's bullishness between this candle, or let's say any of these candles, and this one. So let's look at this guy here. So this candle is 17 September. The close is higher than today's close. Today's close is lower. And you can see here that the divergence is bullish on the bullish side. Okay. So with that, I still think there's a little bit of upside on this strategy play. Ultimately, the midterm play is to the downside. But I do recognize that in the near term, price movement can be bullish a bit. So I'm annotating it just like that. Okay. So they might reclaim this support line here, this small one. It's not a long one. So let's clean up my annotations real quick. Ultimately, it's still to the downside. I'm not changing that part. But it's possible they may go up here, test the 200-day, and maximum up to this. Here, let me go like this. They'll go up, maximum, and down. Okay? And then overall direction remains to the downside. So it's not a big move upward. It's not. Yeah, I don't think it's a big move upward. Okay, comparatively. Let's see. Yeah, comparatively. I mean, yeah, I'm not going along on this, so that's why I'm only saying up to here. Okay, up to the 364. Okay, let's switch over to Bill Gates' company, Microsoft. Similar to the other tickers, the momentum indicator is on the bearish side. I put the sharks up here. You could see, and I did talk about it last week, that the bottom edge of this gap fill would likely be resistance. And sure enough, you can see that happening here. Okay, it's resistance. So overall, no change in my annotation, my prediction, just lower prices for Microsoft. I'm just going to slide this over to the right, move this over to the right, and slide this over to the right, okay? Still, take your profits for Microsoft if you can, and then wait for the entry long. It's not the time to go long right now. Switching over to Tesla, you can see here this upper trend line, okay, right here. Upper trend line, I talked about how they'll likely push it around up here above the trend line before they fail it, okay? So today they attempted to fail it with not a lot of volume, but you can see that the price will fail. And why? It's because of this momentum indicator down here. Okay, it's bearish. With that, you are likely to see in the coming week that price will fail underneath this. If it gets under there, and I talked about it last time, this would be a nice entry to the short side to go with the sharks, because this is a shark moment. Okay, so you can see it here. The indicator below, okay, confirms that the momentum will switch. And let's put this gap fill here. This is a decent gap for it to fill. So, okay, something like that. So underneath here, move downward. Let's see what how far that would be. for the gap fill, about 8%. Okay, so not huge. Maybe a 10% move to this bottom edge here, bottom trend line as support, and we'll see what it does there. Let's look in a slightly wider time frame to get a feel for the overall distance. So I really think, this is where I made the annotation before, that it would get down here to this 322-ish range. Not right away, but it will, okay? So that is Tesla over to Palantir. Palantir is retesting this trend line here. So this rising wedge, you can see it here, it's like this pizza wedge. I'll just kind of make it thicker just to highlight a point. There's the rising wedge, okay? And price is coming back to retest this edge here, okay? That's just overall price action with a little bit of momentum here to the upside. But I'm not putting the whale here to say, hey, everybody pile in. That really isn't the point. The point is, take a look at all of this bearish divergence down here, okay? All this pent-up divergence that goes all the way back to November last year, and it will unwind. So overall, the direction remains to the downside. I'll just kind of clean this up a little bit and use this. So it's likely something like this, a bounce, and then further to the downside, okay? The 200 days here, I'll just slide it over. You can see how it may bounce off the 200-day. It's fine. But the overall direction remains to the downside, okay? And is there divergence in the near term? Let's see. I'm zooming in to look at today's doji candle. A doji candle is an indecision candle. Price opened and closed pretty much on the same spot. You see that. I'll go to the hourly just to explain the point. So price opened over here at, what is this? Opened at 182 and closed at 182. So, you know, I'm not talking about the cents. It's 182.53 at the open, and at the close, 182.58. Okay, so 182.58. Now, what I do want to highlight is today's doji right here is higher than the Friday close up here. Okay, so what does that mean? Today's price is higher than Friday's. And take a look at this down here. The RSI already shows bearish momentum. Okay, not huge, so I'm not going to jump in and say that it's a shark move, but you can see that. So what are we going to do? We're going to extend this line here. Give me a second here. Extend this one to the right. And then draw the underside here. This is resistance. And it's possible tomorrow, the next day, they'll bring price up here, get everybody excited again, only to sell it, okay? But overall, further low prices for Palantir. Don't go long Palantir now. Switching to Northrop Grumman. Let's see here, annotations. Still to the downside, you can see the resistance up here. No change in my prediction. This is a little bit of retail investors jumping back in to try to maintain price, but really not a lot of volume. I do want to add one more volume line. Let's see, excuse me, another line going across here. I'm looking at this candle right here, this long one on 21 July, okay, which is right here, this one. And what I want to do is I'm going to put this horizontal line right here. Let's go down just a little bit. Let's make it a 1. All right, so that's a significant line to pay attention to because of the volume. So on this day, which is 22 July, they had 2.4 million shares. Okay, so that's a significant line. There may be a small bounce off of there. So I'll just annotate it real quick. So maximum upside is this part here. That's still in play. Likely what they'll do is it'll fail, come down, bounce off of this, come back up before it fails again. Okay. Ultimately, it's the gap fill down here is I'll call it the target. Okay. Before you decide to do something else. Okay, so lower prices for Northrop. I'm just going to slide this over. There you go. Taking a look at GM. GM's behaving as anticipated. So all the squiggly line up here was my annotation to say, hey, they'll bounce it above this trend line, which they did. It failed, and then it'll come back and retest. Well, in fact, it's retested for approximately 2 weeks. You can see that. It retested the bottom side of this trend line. And it's still respecting the bottom side of this trend line. You can see, I'm just going to slide this to the right because it's still respecting it. Further low prices for GM. Let's see if I can just slide this over. Like this. Yeah, I may do something like that. Let's see here. Clean this up, extend this out. Give me a second here. Let's extend this. Okay. And it doesn't have to be a triple line. I'll just make it a 1 again. And there's the annotation. So yeah, reject off of this line up here, come down, take a little small bounce. They always do that. And then it'll eventually fail. Here's the 200-day down here. Oops. It's kind of tough to freehand. I'll kind of go like that. And that's the 200-day. You'll see it come into play a little bit. Down here, there may be a bounce here. Overall, lower prices for GM. Okay, and you can see, let's zoom in. Yeah, you can see divergence came in. All right, I'm going to put a shark signal here, up here. Because this candle here, which is 18 September, is up here, higher than these over here. Okay, pretty obvious. And on the flip side, the RSI is to the downside. With that, I'll put a shark in here for us, just to remain consistent, that the sharks are telling one another to get out. Okay, so let's see here. Is this a good entry short? I kind of missed it. Let's see, if I had taken the short and my target's down here, about a 15% move down to the 200-day. All right, so I'll wait. I don't like to chase price. So if they can bring it back up for me tomorrow or the next day, bring it back up a little bit higher, yeah, then I'll take a short up here, or I'll wait for it to break underneath this. So that might be the more risk reward type of move. Wait for the break underneath this trend line here, take the short down here. Okay, all right, so I'm going to keep this one, keep an eye on this one. Abercrombie and Fitch. All right, this one, I talked about a small bullishness here, okay, which brought it back up here. I thought the 200-day would be in play. It hasn't yet. Price continues to move to the downside. That's my target, still to the downside. All right, maximum up there, overall to the downside. Okay, down to 74. 74 is a lot of support. So let's look at that. Now, once it gets to 74, we'll have to reassess because there's a huge gap down here. Okay, just slide it over. From where we are now to that gap fill, in case we're interested, it's about a 50% move, so it's a huge move. It won't happen in one move, so we'll have to play it by ear, play it between the lines, as I like to say. We'll pay attention to this one. I'm observing that there aren't that many tickers in my set of 10 that you guys are that interested in. So we'll have to rotate. Give me a suggestion on different tickers to review. Let's go to one of the long plays, one of the two that I've been talking about, continues to play out, albeit slowly. Okay, General Mills has now reclaimed very gently, ever so gently, this purple trend line. Okay, so I talked about if you were able to take an entry down here, that would have been very beautiful. I added to my entry somewhere here, long, so I'm long this. And you can see that I put the whale here to inform everyone of all the bullishness. And they've already told one another to get back in. Ultimately, my exit, I'll play it to the 200-day first, okay, because that's kind of how I like to do it. So I play it to the 200-day, which is about a 10-15% move. Great. Depending on where your entry was, right? If you took an entry down here. And then ultimately, the exit would be up here. So if I were to get it up there, yeah, so it's about a 30% move. For me, there aren't that many long opportunities out there. So this one is a good one, in my opinion. Slide this over, there you go. The other long play, which is also slowly forming very well, is UPS. UPS, anywhere along this downward sloping trend line is a good long. Okay, I put this green annotation to say, take that long if you can get it there. Okay, ultimately, exits up here, about a 20% move, 25% move, depending on where you got in. And yeah, they're just kind of bouncing around. Eventually, they'll get it up there, okay? So not many long opportunities out there. A lot of bullishness on this. Take a look. Kind of remind everybody. There you go. Bullishness down there. I put the whale in here to remind folks. In fact, I should put another whale here. Put two whales. Okay. Because the whales showed up to inform us about the same thing, but at different times. So this whale, the first whale here, is based on this point and this point, okay? Two data points, this one and this one, hence this green line. This whale came in because it was this point and this point, and this whale came in, okay? There you have it. So with that, just kind of slide this down here. I don't think it'll come back down there for the entry, but that's the second whale. So there you go. If you can get in the trade, I'll be happy for you. All right, so those are the tickers for today. I hope you found value in these charts and my predictions. Let me know in the comments what other tickers to look at. I'm going to remove some of these tickers. In fact, I'm not that interested in Abercrombie and Fitch at this moment, just from where the price is between the lines. It's not close to a resistance line or close to a support line. It's really a no trade at the moment for Abercrombie and Fitch. And there may be other tickers out there which are setting up well for a long or short. So just give me an idea of what you want to look at. Give me a thumbs up, please. Like my material, share it with your friends and family. And always, good luck with your trades.